Hi friends, welcome to Career Connects. Today we'll cover a very important topic that is adjusting entries. This is very important topic from the interview point of view. If you are attending any position or role in accounts and finance function, you should be ready to face questions on this topic. Sometimes the questions are direct and sometimes the questions are indirect. Many candidates fail to answer the questions on this topic correctly. I guarantee you that this video helps you to understand the topic on adjustment entries and answer the questions in interview very confidently. Let us begin. So, all about adjusting entries. So, adjustment entries are a set of journal entries recorded at the end of an accounting period of every company. In simple, financial statements of any company are prepared from a certain point of time, mostly by 31st March. You know, right? So, for this period, that is the period from 1st April to 31st March of previous year, that is just completed year. So, there should be many receipts or payments pertaining to that period, might not be received or paid on time in cash, means cash is not yet dispersed. So, not recording these pending transactions makes financial statements inaccurate. You got it right. So, that is the reason every company record four types of adjustment entries at the end of every period to present financial statements in a true and fair view. So, these are the different types of adjustment entries. There are four types: prepaid expenses, accrued expenses, unearned income, and accrued income. And apart from the four, another adjustment entry is to be prepaid, that is depreciation entries. So, total five you can say. Prepaid expenses, that means expenses paid in advance. For example, salary advance. This is an asset. Expenses paid in advance should always be an asset. And accrued expenses. This is quite opposite of the previous one. That is expenses due but not yet paid. For example, provision for electricity bill not yet received, so not yet paid. This is a liability. Then unearned income. That is income received in advance, not yet due. So booking advance payment received. This is a liability. That is income received in advance. Accrued income. This is again opposite of the unearned income. Income due but not yet received. For example, interest earned on loans to be paid on maturity. This is again an asset. These are the four types of adjustment entries and depreciation entry. That is five types of adjustment entries. Normally, every company should record at the end of every accounting period. Why adjustment entries are so important? Answer. The adjustment entries are so important to present finance statements in a true and fair view. Got this? So make this line understand. To present finance statements in a true and fair view. And also, they are necessary to meet the basic concepts of accounting. They are accrual, revenue recognition, matching, and period concepts. So, adjustment entries not only required to provide finance statements in a true and fair view, but also the adjustment entries meet the basic accounting concepts. These four: accrual concept, revenue recognition, matching, and period concepts. So that is how the adjustment entries are very important from the accounting point of view. Example: company paid insurance premium for a period of 1 year on 1st October 12,000. So remember this, on 1st October it is paid for 1 year. So the premium starts from 1st October to 30th September of next year. So the amount from 1st October to 31st March, that is first 6 months, that is 6,000 rupees pertaining to the current accounting period. And the remaining balance of 6,000 rupees, that is 1st May to 30th September, is the premium paid in advance for future period. This should be first, not 1st May, 1st April it should be. Okay, so this 6,000 to be shown as prepaid expense on the asset side of balance sheet as on 31st March. Okay, so 50% of the amount, 6,000 rupees, should be shown as an expenditure, and 6,000 rupees balance, that is prepaid expense, should be shown on asset side of the balance sheet as on 31st March. Prepaid expense rent. One example here. Assume a 2-month lease is entered and rent paid in advance on 1st March 2021 for 3,000 rupees. The following entry would be needed to record the transaction on 1st March. So prepaid rent, debtor 3,000, cash 3,000, prepaid of 2 months lease. By March 31st, 2021, half of the rental period has lapsed. If a financial statements were to be prepared at the end of March, an existing entry to record rent expense and reduce prepaid rent would be needed on that financial statement date. Got it? So on 31st March 2021, rent expense accounted are to prepaid rent, that is only 1,500. To narration will be to adjust prepaid rent for portion lapsed 3,000 by 2 months. Got it? So 50% comes under expense for that period and 50% rent expense, prepaid rent. As a result of the above entry and adjusting entry, the income statement for March would report rent expense of only 1,500, and the balance sheet at March 31st would report prepaid rent of 1,500 on asset side. Got it? The remaining 1,500 prepaid amount would be expensive in April month, in the month of April. So please note this point. Then accrued expense rent. Accrued rent is the opposite of the prepaid rent discussed earlier. Prepaid rent is accounting related to the rent that was paid in advance, but in contrast, accrued rent relates to the rent that has not yet been paid, but the utilization of the asset has already been occurred. That is accrued expense. Means we are due to pay. For example, assume that office space is released and the terms of agreement stipulate that rent will be paid within 10 days after the end of each month at the rate of 400 per month. During December of 2021, ABC company occupied the lease space, and the appropriate adjusting entry for December follows. On 31st December 2021, for example, this company is closing the books on 31st December 2021. So rent expense 400, rent payable 400 to record accrued rent. When the rent is paid on Jan 10th, 2022, this entry would be needed. For example, rent payable 400, account debtor to cash account 400. Unearned income. We'll see an example on unearned income. King's Consultants received 20,000 as 20% upfront advance and consultancy income on 15th December 2012. The consultancy contract is completed in March 2013, upon which they receive a balance income of 80,000. King's Consultants have an accounting year end of 31st December 2022. Please note this. So accounting year ends 31st December 2022 for the company. King's Consultants will book the advance received as a liability of December 2012, as they are not yet entitled to recognize any consultancy income till the service are rendered. Note this point. So upon completion of the contract, the income is recognized in 2013, next year, and the advance adjusted. So advance adjusted, this is adjusted. So in December 2012, the books will record bank account data to unearned income 20,000. So in March 2013, bank account data are 80,000, unearned income account data are 20,000. So income from consultancy 1 lakh rupees. This is how they record the transactions for unearned income. Please make this example noted. Now accrued income. Example interest, we'll see. ABC Limited receives interest of 10,000 rupees on bank deposit for the month of December 2010. On 3rd January 2011, ABC Limited as on accounting year end 31st December 2010. So this company also closes the books on 31st December 2010. So ABC Limited will recognize interest income of 10,000 in the finance statements of year 2010 only, even though it was received in the next accounting period, as it relates to the current period. Note this point. This is what accrual concept. So following accounting entry will need to be recorded to account for the interest income accrued. So accrued interest accounted are 10,000, interest income from bank 10,000. So on receipt of interest on 3rd Jan, that is next year, bank accounted are 10,000 to accrued interest 10,000. Now finally we'll see depreciation entry. What is depreciation first? They are the book, the cost. So depreciation entry is to book the cost of usage to the asset account. So depreciation entry would be depreciation accounted are 10,000 to asset account 10,000. So this is what depreciation is. So you understand, right, what are the adjustment entries and what they are. So here are few questions that are commonly asked in any interview. So let us proceed. What do you know about adjusting entries? Now you got the answer, right, for this question. You can confidently answer this question based on what we discussed. Second question. When a company prepares adjusting entries, when a company prepares adjustment entries, you know, right? The answer? Correct. That is every year end. Whenever the books want to close and prepare finance statements, it is mostly year end or quarter end, then the company prepares adjustment entries. Third question. Why posting of adjustment entries are important? Can't the company prepare finance statements without adjusting entries? So I encourage you to put your answer or enter your answer in the comment section below. I'll reply to you. Fourth question. How many types of adjustment entries are there? Every company passes. You know, right? Yes. There are 5 types of adjustment entries are there. Fifth question. A company is on 31st March unable to get the exact amount of accrued expense to post adjusting entries. Chairman asked to prepare finance statements for now and post adjustment entries later. So what do? Again, I will ask you to enter your answer in the comment section below. I will reply to you. Okay, these are the questions most commonly asked in any interview in and around this topic. Sixth question. Tell me one example of accrual entry. This is very important question. Tell me one example of accrual entry. So you can get the answer from our previous section, previous discussion. Seventh question. What do you know about unearned income? And tell us which entry you post. Eighth question. What will happen if a company doesn't prepare adjustment entries? You know, right? So adjustment entries are very important in order to prepare finance statements in a true and fair view. And not only that, it is very important to meet basic accounting concepts. You know what are those concepts, right? Yeah. Ninth question. What are the accounting concepts that force to post adjustment entries? Please put your answer in the comment section below. So thanks friends for watching. Please like and subscribe. Also, please write down your thoughts or comments about this topic in the comment section.